Yesterday, Bitcoin was trending that it was crashing. Was it really crashing? Or do people not really know how to do technical analysis? Well, let's take a look and find out. All right, so you guys in a while. I know it's probably been like a week or so. But yeah, I wanted to go over this. Um, I called. I felt like I saw this a couple days ago, and well, if you're following me on Core, and you probably saw that. You're following me on TradingView, you saw that I made this call, and I said where Bitcoin was going to fall back to, and that it would probably begin bullish again once it got back to this point. Yesterday on Twitter, I saw that there was a hashtag Bitcoin crash, and I had to chuckle to myself because just because it's going lower doesn't mean it's crashing. And I feel like people really need to know how to understand technical analysis. So that's what I'm here to do today, to make sure you understand how to technically analyze what is happening in the market, especially when it comes to an asset as big as Bitcoin. Bitcoin doesn't go up forever, guys. It doesn't go up forever. And I even saw a stupid post from Peter Schiff. I know every Bitcoin person out there is going, "Oh my God, Peter Schiff, who gives a crap?" You know, I used to look up to Peter Schiff. I did, because he's always been bullish on gold, and I've always been bullish on gold, and I still am. I don't see a reason why not to be bullish on gold. But you know, Bitcoin is a digital asset. It's completely different than gold. There's no reason why you can't be bullish on both. You know, one's physical, one's digital. That's the only difference. The thing is that Bitcoin gold has, even though gold has hit an all-time high, what, in the last couple of years. I remember when it hit that all-time high, I was trading Forex a lot, and I was trading on the way up, and I remember when it got to the top, and I was like, what if I should short now? Anyways, I'm getting off topic. But let's get back to yesterday's Bitcoin. But first, if you ever watch my content, if you don't know anything about my content, I'm smart money theory, I guess, educator, you could say. Everything I come from has come from experience. It comes from my mentorship with Inner Circle Trader, and I just apply the principles that I'm taught. I was taught, you know, all of it on Forex, and I apply it to crypto, and it works just the same. Which means that markets are manipulated, right? That's what smart money theory is all about. Markets are manipulated, and that's what you got to realize. There's manipulation, right? There's consolidation, and then there's distribution, right? And so we got to always figure out where we're at in the market, where we're likely headed to next, and basically how to figure that out. So that's what I'm going to go over today. So hang tight. Let's go over these charts. But first, like, subscribe to this channel, please. That would be a huge. Or if you're on Rumble, you know, give me one of those Rumble things. That would be awesome too. And yeah, let's go over these charts. So this is right now. This was the call that I had made. I don't know if you can see the date. It's up here. It says February 11th. And this was the chart on February 11th. And if we go ahead and hit play, we can see what happens. It doesn't do exactly what I thought it would do, but it comes up, it almost makes a double top, and then it falls back down into my entry point, exactly to where my entry point is. And now it's moving up. Now, there is a bit, I'm going to go over to the Bitcoin chart now. There is a bit of, I wouldn't say an issue, but I would say not really a concern either. But it looks like it's kind of stayed around this price overnight. I know whenever it hit this point, it was, geez, early in the morning. I'm on the 4-hour chart. Let's go to the 1-hour chart. Because I remember being up really, really late because that's the way my work schedule is. And so I'm just used to going to bed at like 5, 6 o'clock in the morning. I think it was probably around 6 o'clock in the morning. Whenever it was this low, yeah, there we go, around 6, 7, it was entering, the area that I thought it would enter. So I went ahead and put longs on it, as I normally would. Plus, I already had, on another platform, I already had a buy limit on it. So it had entered my buy limit. And as you can see, just a couple hours ago, boom, it tries to shoot up, gets rejected, and shoots back down. Now, why did it get rejected and shoot back down? I can tell you why. It entered the 4-hour fair value gap. So I always talk to you guys about fair value gaps. These are basically voids in price. Not technically voids, but imbalances. Imbalances is the word I'm looking for. What that means is that in between this 4 hours and these 4 hours, you had this one 4-hour that dropped, right? And so you have no wicks that touch on either side, right? Which means that there is an imbalance. Now, if we get to, and this is on the 1-hour, sorry, not the 4-hour. So it reaches up into the imbalance, gets rejected, right? And I'm knowing why it's getting rejected. It's going to get below these lows. And the reason I think it's going to get below these lows is because they're all equal, right? So everybody's seeing these lows right now as basically a support point. Everybody's thinking that this is support. Eventually, it is going to break through these lows. It could be just because that's what retail thinks, right? So if retail is thinking that this is support, right, and money, the people that are able to push around the charts, the way that the algorithm is set up, it's going to fake those people out, right? It's going to make those people think, okay, this is the point, if there are people are buying now, you probably have a ton of people buying now, thinking that, okay, it's already hit this point 1, 2, 3 times, this level. And why did I think it would get to this level? Yeah, I guess this is probably the next question that you're asking, because it was a daily fair value gap. So let's go back to the daily so I can explain why I thought I was going to get to this point. So if we go back here, oops, didn't mean to do that, and we look at the daily, you have, as it's coming up, right, you have this highest point right here that I circled in red, right, and I have high just above it. Then it drops really quick, and it gets to another, previously there was a low, and on this wick, it brings it up to a high, then it drops after that, which gives it a lower low, which makes this high point called a breaker, right? Now, this breaker is basically from the top point to the bottom point, right? Price is more than likely going to end up anywhere in between here and here. Now, Also, in between this breaker, there is a daily fair value gap, which is this outline right here. If I can make it thicker and brighter, I will. There we go. That is the daily fair value gap that I thought I was going to get to. And that's why I put that's where my opening would be. And because, for one, you have the breaker, right? You have the low, high, lower, low. So it constitutes the breaker. And then also, it would not only have the one fair value, whenever this green candle explodes, right? Explodes and takes off and closes above the high point, that's when you have a break of structure. When you have a break of structure, that means things are looking bullish at this point, right? So it does, and it comes up. It even breaks a 4-hour fair value gap, which if you look over here, well, even this, it's actually a daily fair value gap, but turned out to be a 4-hour fair value gap too. So, well, actually, no, I think this is a daily, and I think I actually accidentally put 4-hour, because here's the 4-hour fair value gap. But this is the daily fair value gap. Let me just go ahead and redo that really quick. That way nobody gets confused. So, it fills up the daily fair value gap void, right? Or imbalance, I guess you could say. Hits the top. Now, the top is also where you would find a bearish order block. Bearish order block typically is at the last up candle before your down candle, but it depends on what time frame. Right now, even though it looks like a red candle, on another time frame, this could be a green candle. So if we push this low all the way across, it lines up basically directly with this. So I'll just put bearish order block. Not macaque. Hello. That's what a chicken does. So it comes up and hits this bearish order block, gets rejected, right? Comes back up into the fair value gap. It probably hits another bearish order block within this area. So if we get down to, let's say, 4-hour, let me see if it does in the 4-hour. 4-hour, I don't like this candle, even though it's the last up candle. I don't like it as the bearish order block because it's too wicky. Let's look at it as a 1-hour. Yeah, see, the 1 hour is a little bit better because it's not as wicky. So here, I guess I could pull this down. It doesn't exactly get to the top of it, but even though it's the last candle up, it's all three of these candles, all three of these green candles that are going up that break this high that create the bearish order block. Because they're all in succession, basically all of the same thing. So it doesn't necessarily have to hit the exact bottom of the bearish order block and then get rejected to be a bearish order block. It can be anywhere in this area of the green candles. Now it gets very, very close to the top or the bottom of the last candle if it doesn't exactly hit the bottom of it. It gets really, really close. As it pulls down and pulls back up, enters the fair value gap again, gets rejected, and the whole time I have the Fibonacci of this entire wave, pulled. So I'm thinking, okay, it's on its way down, and then we hit a certain point where it gets below these equal lows. That's one thing you also need to look for, any kind of equal lows. So we have equal lows here. We have all these equal lows right here. That's basically saying this is a liquidity point, right? This is another one of those telling retail traders, hey, it's not going to get below this level, right? Every retail trader is thinking it's not going to get below this level. So what does it do? Boom, smashes right below it, just far enough below it for people probably to chase it and be like, oh no, it got below this. Right, because isn't that what you were taught? Once it gets below a certain point, then it broke structure or whatever you're taught, and to go short with it. Well, people started probably going short with it, and then it turns around automatically on you. That's what smart money does. Smart money knows exactly what you were taught, right? By whoever taught you retail trading, with the trend lines and the bearish and bull flags and all that stuff, that is not relatable in smart money. Okay, so it turns around, goes the exact opposite way. It makes another double high, or equal highs, I guess you could say, right here, and then starts to go back down again. So then people probably chase it again, like thinking, oh, okay, so here is the resistance point. You got a high here, and you got a couple highs here, so they start chasing it down. So then what do they do after they start chasing it down? Boom, it goes back the other way again against them. Exactly my point. So it is went against you not once but twice within the span of a day or two. So then it comes back up into this fair value gap, gets about halfway, which is normal. That's what I always tell people to look for about the halfway point. Even though it's filled it, it also, if you're looking at the 1 hour, it probably gets to about the halfway point of this 1 hour fair value gap block. Let's see if I can pull this over. Boom. Yep, there it is. So probably gets just barely into this 1 hour fair value gap, or about halfway through. So I'm going to put FVG for fair value gap, and then it gets rejected out of that. Pulls up, and then you can see it makes two equal highs here, which is a good thing, which means that there's a liquidity point right there, right? Which means price is probably going to come back up and look to try to break this level. When? I don't know. That's going to be a completely different question. But the whole point is, here you have a fair value gap from here to here. So what is price going to do? It's going to try to fill an imbalance. So it gets halfway into this fair value gap, pulls back down, gets to this imbalance, gets rejected, comes up, makes equal highs, right, to make a liquidity point, and then comes back down, fills in this gap, creates another one, right? Now this one is a 4 hour, as you can see over here, 4 hour fair value gap, and then starts falling. Now the reason it's falling is because it is being attracted toward the daily fair value gap that I talked about down here, that I saw in the first place, that I called a long time ago. That's what it's being called to, that point. Try to fill that void. And that's why I think now that it's hit it, and hit it at least 3 times, making people think that it is going to be a support point, now it's going to drop down into it. It's going to probably drop down into it, fill it up, maybe even get below it, come back up, and it's probably going to consolidate around in this area. And I wouldn't even think, I wouldn't even put it twice to think that it's probably going to consolidate, maybe even lower. I mean, you do have a 4 hour fair value gap down here. And even though that I do think that the daily fair value gap is probably the point that, the lowest of it being at here is probably the lowest that it could get. It could still get lower. It just depends, I guess, on, I don't know. There's a couple things that it could depend on, but I don't think it's going to get any lower than the breaker, right? So that's this low, this high, and this lower low. Let me see. This is probably above my head. Low, high, lower low. I don't think it's going to get anywhere lower than that lowest low, because in here you also have bullish order blocks. So it could come in here, fill this void, drop down, hit one of the last bullish order blocks, which would be one of those guys right, yeah, that right there. I think that's your last red candle down on the hourly. Yep. So your last red candle down on the hourly, it could pull down all the way down into here to make people think it's going to drop even lower, and then boom, turn around and go back the opposite direction. That's what I believe is going to happen. More than likely, I think that is exactly what's going to happen. Now, there is a possibility it could drop into this 4 hour fair value gap. But I personally do not believe it will. Only because if we got to think about the market maker buy or sell model. And if we go back all the way over here, this area to where that gap is already boxed in. So there's a huge box of price action from here to here. And if we draw this all the way over here, that 4 hour fair value gap is pretty much already full. It's already been taken. So I don't see why price would come back and accumulate in an area to where it's already accumulated. You see what I'm saying? It's not going to accumulate in the same area. It's going to accumulate in a different area. As of right now, even though there's a small accumulation right here at the same area of this daily fair value gap, it could accumulate just below, right? Maybe right in this area. Hold on. Could be in that area right there. I think it could accumulate, and that would probably be the lowest area again, and then possibly coming down and hitting the bullish order block and then moving up, and that is it. And then after it moves up, then the problems that you may have or you may see that could result in everybody thinking twice about going long right here or going long in this area is going to be these fair value gaps that it created on the way down, right? So it created this fair value gap. This is a 4-hour fair value gap. Again, it already entered it once, got rejected. Like it's already moving back up, but it can move back up, but get halfway through, get rejected again, right? And then pull back down, accumulate, and then push back up. Or it could actually just zoom right through it. Now, there are equal highs right here, right at the top of this, where you see this fair value gap 4-hour thing. There are equal highs setting right there. So this right here, where this line is, and I'm going to draw all the way across, that is a liquidity point. Now, liquidity point meaning that this is an area to where people could possibly think that it is a sell limit area where people have their sell limits, already placed because they think this is, a rejection point, and they think that, or it could be a buy stop area too, right? So if people think if it passes through this, then that's when people have their buy stop set. So that's when smart money does this thing where they do like a zigzag, right? So what I'm thinking, again, pulls up into the 4-hour fair value gap, comes down. It could hit consequential encroachment, which is halfway through the daily fair value gap, which is this white line I have, and this is consequential encroachment. It could just hit that and then turn around and go back up, and then try to get up and above this 4-hour fair value gap. Or what it could do is it could come up, get halfway through this, again would be the 4-hour consequential encroachment, come down, it could hit the consequential encroachment of the daily, and then accumulate a little bit, and maybe fall even down further and accumulate, and then come down and hit the bullish order block, and then make a pullback back up, maybe hit the top of the 4-hour fair value gap, which would also be which you would also find a bearish order block around that area as well, because it's going to be your last up candle before your down candles close below it, right? That would be a rejection point, right? So it could get rejected there, but at this stage, it's going to be bullish. So it could pull back and then just try to fill this, not really a void, but an imbalance. That's what price looks to do. It always looks to attack liquidity and fill imbalances, right? So this is an imbalance it could be looking to fill, right? And let's say it does that. Let's say it accumulates here and it fills the imbalance, and then it breaks the 4-hour fair value gap, and then again that's an equal high area. So again, people could have their sell limits put here, buy stops set here. So as soon as it breaks that, let's just say it comes down here, comes down to this area, comes up, hits the top of this bearish order block, fills this 4-hour fair value gap, and then breaks this 4-hour fair value gap, which also has the liquidity point of those highs, and then it pulls back because people have sell limits and then buy stops. So to trick both of those guys, it'll go past their sell limits, probably hit their stop losses. People will chase it, just like they did in those other areas here that I was talking about, like where it comes down where it comes down just below, where they had equal lows, and then turns around and goes back. And also made equal highs, and then it pulled back down. What did people do? Probably chased it, and then after they chased it, boom, it went the other way. That's what they're probably going to be doing at this point over here. At this point, they're going to be taking it, going above it, pulling back, and then going back up again, because they're going to make people chase it going back down, thinking that it is a resistance point, and then pushing back up, getting back up into this 4-hour fair value gap, maybe getting about halfway into it, maybe not, maybe less, filling the void eventually, and then getting up above. And I would say here would be a rejection point at this bearish order block. Now, once it gets this bearish order block, it could just come back and fill this void again. It could create another fair value gap on the way up, and it come back and fill that. Like I said, let's just draw one that it could create on the way up. Let's say it does that right here. Then what it would do is it could, once it comes up and real quick, come down here, fill this area, come up here, hit this bearish order block. Here it leaves a fair value gap. It could fill this area for a little bit and then come down, and then all of a sudden break back up, and then finally break these highs. That's what I'm seeing is going to happen. That's what I'm thinking is going to happen. It's gonna try to twist and turn in every direction to make you think where it's going is not actually where it's going. That's what smart money does. That's what the people who have all the power to push around these charts, that's what they have the ability to do, right? Is to push it in the way to where you think it's going to go one way, so you're tricked. You start either selling off with it, and then it goes the other way, or you think that here is not a resistance, sorry, a support line, and you start buying here. Hey, there's no problem with buying here, to be honest. I've already put my buys in. It could get back down to here. Hey, if it does, good. I'm just going to buy a bit more, because I do not think it's going to get any lower than this. The worst it could get is 34. It is just 34, 300 and something, right? I think that is the worst it could get, but I do not think it's going to get down here. I think the worst it could actually get is this green line right here, which is 36,259. I think that's the worst that it could get. That's just my personal opinion. It's not financial advice. This is just everything that I have seen and I have studied from smart money, from my mentor, and everything I've just called so far between all the different cryptos that I've called on TradingView, anywhere between Matic and Ethereum. Almost all these calls somehow come to light. Yeah, I may hit my stop loss sometimes, but if I do, as long as it doesn't break some kind of structure, it doesn't make me think, okay, so then it's going to go some kind of opposite way. So like right now, it could come down and break this low, but the thing is that it still hasn't gotten below this really deep low at 32,300, right? As long as it doesn't break that, then my analysis is still bullish. So at that point, if it does come down, get halfway to, through to this 4-hour fair value gap, which it could, because there's two equal lows right here, which would mean right here, let's smooth that gold line up. Right there, you have two equal lows. It could actually come back down, break below that, and then hit the last red candle, which would be that one right there. And this is on a 4-hour basis. So even if we went on an hour basis, I guarantee you there's probably another red candle that's probably even lower. And there is. It looks like it comes all the way down to here. So 33,786. It could still come all the way down to there. And I would still be bullish on it, because it could still come all the way down to there, hit the bullish order block, because that's what that is. Bullish order block is your last down candle before your next up candle, or next up candles. It could be a succession of candles, go up above and close above it. Now, as you can see, these candles right here go up above and close above this high. That's what makes me, think that this is all bullish, because why? This break structure right here. You have a high here, a low here, and then a higher high here. This break structure And then on that daily, you have this low here, high here, lower low here, and then boom, it goes up. What does it do? Closes above that high within this area. That is a break of structure. Again, that's why I think that within this break of structure area, this low, high, lower, low, that's why I don't think it's going to get any lower than that point. Just my personal opinion. But it could get down to the last bullish order block of 3,000, whatever it was, 3,600 or 3,786, and I would still be bullish. Now, if it got down, the only way I could be bearish on this is if we went into the weekly, right? And if I took a look at the weekly, take a look at the weekly, and I see it gets below the 28,800 and closes below that on the weekly, that's when I would start to be bearish. But until then, I am still bullish on this chart. You just have to be patient and wait until it gets to that certain point that you were waiting on, that I have been waiting on since February 4th. That's when I actually put my entry to where Bitcoin is now on Core, on the Core app. I put it on TradingView February 11th, but February 4th, I think that's the day whenever we saw it make it that huge. February 4th, that was the day we saw it make that huge run up. So whenever I saw it make that huge run up and I saw this gap right here that was basically opened and not filled, that's when I thought it's going to come back down to this area. That's the type of thinking that you have to have for smart money, because they're going to leave those gaps open so that they can come back and fill them. Either that or at least touch that point, because that is where smart money still has shorts, right? Smart money still has shorts in these areas, and they're holding on to them because they drove it up higher, right? They dropped a bunch of shorts, right, just to drive the price down, so that way they could add 20 times more longs. And as soon as they did, boom, it took off. So that way they could hold these shorts, so that way when it came back into this area, they could let go of those shorts, break even on those shorts, but make money on the longs. Make sense? Good. I hope it does. But that's all I got for you guys today. Thanks a lot for watching. And remember to always wear... Remember what I was going to say? Okay. All right. If you don't, always remember to wear your pants.